Why is the stock market ignoring reality? Stock markets have had a brilliant few weeks. That's a bit weird, with the Iran war constricting the world's energy supply and tangling up all sorts of supply chains. But rather than panicking, investors are feeling euphoric. This chart shows essentially how optimistic shareholders are feeling. And you can see that even going back 150 years, the only other time they've been as optimistic as they are today was in the late 1990s during the internet stock mania. Investors have a lot to be happy about. Corporate earnings have been great, and not just at AI companies. They've been growing unusually quickly across the market. Now, it helps that we haven't had a deep, drawn-out recession for a long time. That means companies have been able to focus on growth, on innovation, on new products, and not just on fighting to survive. But part of this is down to investor psychology, and that's where things look worrying. One reason they're so optimistic is muscle memory. After previous crises, think of the COVID pandemic or the inflation that followed it, or Russia's invasion of Ukraine, markets proved surprisingly resilient and bounced back in a big way. Investors who panicked and sold their stocks missed out on huge gains. Nobody wants to repeat that mistake today. But the Iran war has choked off a lot of the world's energy supply, and even if it were to end tomorrow, it would take weeks or months to bring that back online. In fact, there's no end in sight. Government bonds have already taken a hit, with investors worrying about the inflation, strained budgets, and economic damage that will cause. And after all, the last time shares were this expensive, during the dot-com bubble, it didn't take a crisis to send prices plummeting. Investors just ran out of faith. Now, they very much do have a crisis on their hands. So, how long can the euphoria last?